All right, everybody. My name is Dave Clark. I'm with FinCapDev. Before we kick off tonight's webinar with Matt Streisfeld of LLR Partners, we're going to do a quick little overview of FinCapDev, what it is, what it's all about, and why it's awesome, and why you should apply. So FinCapDev, if you're unaware, is a $100,000 mobile app development competition primarily designed to improve the financial health of a community that's called the underserved, those that are outside the traditional banking system. As we move to our next slide here, eventually, I promise. So this kind of gives you a quick little overview of who is behind FinCapDev. It is administered by the Doorway to Dreams Fund and the Center for Financial Services Innovation. Get a little sense of what both those organizations do here from this slide. And rather than regurgitate content to you, I will let you read it yourself. FinCapDev is made possible by three extremely generous organizations: the Citi Foundation, the Ford Foundation, and the MetLife Foundation. To give you a sense then also sort of the underserved, unbanked population, it's a huge market. We know that mobile penetration is high. Across the country we have 87% of U.S. adults owning a mobile phone, 45% smartphone. Those numbers are roughly the same, if not stronger, amongst the underbanked. 90% of the underbanked population owns a mobile phone, 56% own a smartphone. We're increasingly seeing that the mobile device is the primary method of internet access for these populations. A couple more statistics there to kind of give you a greater sense of who this population actually is. In short, it's sort of more than you think. It's anywhere between 68 to 90 million Americans. So FinCapDev, as mentioned, is a mobile app development competition. So what do you get when you apply to FinCapDev? So in order to help people build real, tangible apps that are actually downloadable in the App Store, which FinCapDev finalists will spend the summer doing, we're providing a handful of resources that helps make that possible, that traditionally may not be easy to access. That's things like startup cash, data sources, expert advisors from, ranging from Fortune financial services companies all the way to tech startups, a whole network of people in this tech, mobile, financial services space. Plus, we'll hold a demo day in the early fall at which you'll demo your product to a panel of expert judges, again, sort of the same sort of community. That's where they will award the $100,000 prize purse, including $50,000 to the winner. And then one interesting note there, not just interesting, but really, really cool. FinCapDev, its administrators, the financial backers behind the competition, no one's taking any stake in what gets built here, which makes it a little bit different than the traditional accelerator or incubator, where you're oftentimes, in some sort of trade situation. And then to give you a sense of, the partners that we have in FinCapDev that you will be able to access as a finalist, Intuit, Bing, Level Up, LLR Partners, Pay Near Me. All these companies are providing some sort of resource, whether it is technical in a data sort of way to help you build better apps, or in an advisor sort of way. Think of like sort of office hours where, a handful of hours on the phone with someone from Bing who specializes in, say, mobile search, right? That's supremely useful in helping you build a better product. So where are we right now? Today's April 3rd. Hopefully this isn't your first time hearing about FinCapDev. We have our proposal phase is currently open. That's open through April 7th. We encourage everyone to submit a proposal. And it's not just for engineers, software developers, folks who can technically build apps. It's for anybody. Just looking at last year's class of finalists, we had a group of students from, I think it was South Florida University. We had a woman from Clinton, Mississippi, who runs an AM Sunday morning talk radio show where she helps people with their personal financial habits. So it's really, anybody can participate in this, and we provide you with the tools to help you actually build an app. The proposal takes anywhere from half hour to 2 hours to complete. It's super straightforward and all web-based. So again, we encourage everybody to submit a proposal. At this point, I am going to end my pitch. I'm going to turn it over to Matt Streisfeld of LLR Partners. Matt is a vice president there based in Philadelphia. Matt's specialty at LLR Partners, which is a middle market private equity firm providing capital and strategic guidance to growth companies. I know that sounds like I just read it because I did. Matt focuses on making minority and majority investments in financial services and technology businesses through a variety of transactions, including growth capital, recapitalizations, and buyouts. With that, I will turn it over to Matt. Take it away, Matt.
Thanks, Dave. Well, guys, thanks very much for taking the time today. I just want to let everyone know that you can submit a question using our webinar tool throughout the presentation. Please feel free to send your questions. We'll answer them along the way and engage in that type of dialogue. But I think happy to answer any questions as we go away. Quickly, let me just give you a brief background about who LLR is and what we're going to be covering today. LLR, as Dave just mentioned, was founded in 1999. We have since raised over $2 billion in capital across 4 funds, and initially started as a provider of growth capital to companies in the Mid-Atlantic region. And what we're really trying to do is partner with founders, entrepreneurs, executives, and bring them a user-friendly customer service orientation to private equity. A little bit different than traditional, so-called New York private equity world and some of the venture world, but really dedicating the resources and capital to support entrepreneurs and founders as they expand their businesses. Since our founding, we've expanded national. We've got a couple offices, and are really focused on building brand. We really spend our time. If you think about our investment criteria, we look at businesses that have revenues between $15 million and $250 million of revenue, growing at 10, 20 plus top line per year. Our investment size tends to be what we call sort of the lower to middle market segment, which is sort of 20 to 100 million. But what we typically see is the businesses that we're buying were venture-backed or startup type of firms only a few years ago, and we're helping them with the next stage of funding and growth to make them a much more significant player in the market. Just high level, we cover areas from business services, consumer education, healthcare services, software IT, and what we call financial services, but it's really a sort of a financial technology and services platform where we cover the spectrum of financial services. When you think about the vertical markets, banks, insurance companies, asset managers, capital markets, and payments are the realms that we really spend our time on, and really think that there's a lot of opportunities to take advantage of by utilizing technology. What I thought would be helpful to start off this discussion or this webinar is really to talk about what's impacting the financial technology segment. And what we've seen is that the sector as a whole is undertaking a systematic shift towards away from a more technology, towards a much more technology-based approach to the services offering in order to enhance the commerce activity, improve customer services. Examples you could think about are payments. People will say paper is debt. Checks have decreased almost 3% per annum over, call it the last 15, 16 years, while electronic payments have increased by 12% over the same period. Yeah, everyone is talking about it. How can you not? But what is the market for cryptocurrencies? Maybe it's Bitcoins, maybe it's other digital currencies, but for lack of better thought, they're at least has been, and despite whatever has been in the headlines in the market and what's been going on, there has been a prevalent need, and there is probably an ongoing desire to have a digital currency that is stored and secured appropriately. And although it's unclear if Bitcoin itself became the currency in 5 years, the investments that you've seen in Bitcoin exchanges and the technology processing and the security and the data has been meaningful, and I think that will end up continuing as that becomes a prevalent change, an evolving change in the payment segment. We talk about insurance, typically experience-based or people-intensive business, and companies no longer need brokers or agents to quote and bind small to middle market business policies. Personal lines, these businesses can now be streamlined and automated through short applications where historically they had just been, you need to pick up your phone and it takes you days, weeks, and months in order to get an insurance policy. We've seen the evolution in the investment solutions space, from the need and desire for mutual funds to what we call sort of low-cost beta products, like electronically traded products, electronically traded funds. And you've also seen greater automation as individuals have become more intelligent about the investment products that they need, and the desire to require their own research and their own management and knowledge of their financial systems. And a number of companies have been sparked, pretty much since the crisis 5, 6 years ago, as a cause for those developing investment solutions. And speaking of the crisis, especially finance a few years back, people forget, but the market was dry with capital. You couldn't raise money, you couldn't borrow money, and despite sort of frothy credit markets in recent days, there's part of that is primarily due to the fact that there's been alternative sources to capital besides traditional banks. There's that increased peer-to-peer lending. There are a number of different iterations. There's ways to raise money through Kickstarters and Indiegogo, and a number of different opportunities that create that peer-to-peer landscape. And last on this list is we're talking about banks. I mean, who goes to a bank anymore? Everyone does it virtually or online. You can deposit remote through various apps and various tools, and there's really no need to ever, besides maybe taking cash out from an ATM, people usually don't go to banks anymore. Right? Everything can be done online, and as we've seen paper decreasing and the increase in credit and debit and ACH, et cetera, it's really been sort of a refined business model. It's been amazing to see how the market has been changing since 2008 when the crisis hit. Years ago, it's like, when you look back at the 5 years prior to 2008, everything was wonderful and capital was free and robust, and companies were able to get by banking on organic economic growth as the driver of their business. And post-crisis, people have been holding cash, but it's been a much slower recovery than people may have expected. And I think when you combine the fact that you've got excess capital plus slow economic recovery, there has been a need and desire to invest in growth. And that's come in a number of different ways, but people are paying for technology and people. It's more efficient to buy versus build today. They're maintaining these large cash reserves, and what we're seeing is, from a company standpoint, but primarily even, or principally even through the business models that are not investing in technology, our belief is that those businesses models will become obsolete over time. It's just a matter of when. But what we're really seeing is, developing and investing in FinTech requires specialization in the end markets, the ability to understand the macro and the micro trends, and its ability to successfully tackle an evolving regulatory or re-regulatory environment when you think about all the changes that have occurred and have been reversed post 08 and Dodd-Frank and the Jobs Act, et cetera. But there's a number of regulatory is something that's not always thought about, but there's a lot of opportunity that's created through dislocations. In the regulatory environment that allows you to capitalize. So heading to the next page. Where is the market heading? And what we really have seen is a couple of concepts, and one in particular is what we call, or I shouldn't say I call it, but what it's known in the market as Uberization, which is enabling a seamless integrated experience for both the consumer and merchants within the specific verticals. You talk about Uber, and what does that do? That allows an individual through a mobile app to have an end-to-end solution to have a car, pick you up, and be able to transact directly without any other additional needs and security features. And it's simplifying the customer experience and creating a direct purchasing scheme. What we may call as convergence of services around front-end and back-end platforms is really evolving, and has been a critical dynamic to the success of a number of other brands, in the sense that have been able to experience this Uberization concept of the customer experience. We talk about payment interfaces, the Square, Stripes, MindBodies of the world, the peer-to-peer lenders, the mobile wallet solutions, the nascent B2C channels. These are the businesses that have been true disruptors in the market over the past couple of years, and have sort of changed the way that we view financial technology. Big aspect is monetizing data, the ability to extract and maximize utility from customers and their financial information to support their decision making. People always are talking about beacon technologies and the way to capitalize on beacon technologies, and that is a very important aspect to say. You walk into a store, and on your mobile device, you get a signal that says, today at Target, 25% off electronics and clothing, and you're in the store and you say, okay, I'm going to go apply this coupon, and I'm going to go buy something. And that's all aspects of loyalty programs, card programs, beacon technologies, all interfacing together in order to enhance the customer experience and also drive purchasing. But as the executive chairman of Google, Eric Schmidt, has said, every 2 days now, we create as much information as we did from the dawn of civilization up into 2003. I mean, that is the idea of being able to monetize the information that's being created is such a valuable tool. And automating data tools, financial tools, creating a customer experience while disintermediating the traditional broker channels, automating common financial money management activities. These are all critical aspects that are driving the way that where the market is heading and where it is today. Sorry, we just slide's a little sticky. Well, guys, what we'll cover next is the impact of financial technology on the financial services landscape. And where we're really seeing this is, the type of impact that we've always focused on as investors, and where we're seeing it as opportunities in the market is three broad disruptions or impacts. One is applying technology to improve processes. Electronification, streamlining paper products, moving from people-centric to technology-centric, streamlined distributions. And this really covers all sectors. And as you guys are sitting there and you're thinking about apps that you're focusing on, it's thinking about ways in which you can disintermediate an individual or a people-driven business and substitute for technology in an efficient way. And it's such a strong and significant opportunity that is really actually quite desired because a lot of processes are inefficient, and it really spans across the various verticals within financial services. One of the key aspects, of FinCapDev is finding technologies that better serve the underserved markets and leveraging those technologies to reach those. And those principally fall under lending, payments, banking, but they also fall under insurance. They also fall under capital markets. And when I say what about how is insurance related to the underserved? I mean, think about the hundreds and thousands of businesses. 99% or 95% of all businesses in the United States have less than 20 employees. And that's such an astonishing figure when you actually think about the fact that a lot of those businesses have sub-5 employees, or they're professionals, or they're self-employed. And is when you think about the census data, those are the people that are driving our economy. And a lot of those individuals are needing technologies to help serve their businesses, help serving their business needs. And that could range from not just traditional lending and banking products, but it would be how they can better utilize or leverage resources, how they can get insurance in order to be able to, the janitor that needs insurance in order to get, from a regulatory standpoint, go into the school and provide his or her job. And those are, being able to get direct access to those markets is incredibly necessary. And the last one on this list is just using technology to disrupt established financial services business models. You talk about the traditional, and it's similar to two, but even a little bit more broadly, it's changing the production and distribution of financial products and across the various sectors. And all sectors truly apply when you're leveraging design and data to meet the financial services demands of consumers and businesses. So how are people delivering these different solutions to the market, and what type of specific solutions can we apply that improve the processes? And the way that the most common concepts today that people talk about is SaaS delivery, cloud delivery, big data, and mobile. And I'm sure no one needs me to try to define any of these, but SaaS being much more subscription, lower cost to adapt, faster to deploy, cloud, hosted as a service, hosted online as a service, technology platform, centralizes data storage, centralizes information, and being able to pull that information at ease. Big data, everyone kind of knows is how, but more importantly, it's what kind of analytical tools can you create to harness data to provide valuable business insights? How can you protect against fraud? How can you target loyalty and marketing programs? How can you change algorithmic trading and improving risk management? And how you can use that transaction data, social networks, location data, market prices, skew information for payments, that we can really alter the consumer merchant payment model. And as David mentioned slightly earlier today, is there's just a growing need for mobile apps and digital apps as part of this large opportunity, because you'll see in a couple of slides the digital technologies that we're using are just growing exponentially and moving from what used to be traditional PCs to smartphones to iPads, and what is next and what's going to be the next big solution. But 29% of adults own a tablet. There's over 6 billion mobile phone subscriptions, almost 1 billion smartphones. I mean, they're becoming ubiquitous with the way that we interact and we do business, and it's just it's going to factor into the way we do banking, we do payments, we do transfer, we do insurance purchasing, we do claims purchasing. All of those can now be delivered through a mobile application. Now on this slide, we're basically sort of showing a little bit more about what we talked about earlier, but digital technologies in the way that they're impacting how we do business. I mean, the number of electronic device shipments is expected to grow exponentially. I mean, we're looking at over 2 billion electronic devices over the next 4 or 5 years. And a lot of that is driven by of smartphones and tablets. And if you looked 5 years ago, there was no such thing as a tablet, and smartphones were still in its infancy. But you still had, and although there had been smartphones in the past, there really was an evolution in technology between the iPhone and Samsung and their and HTC and their ability to develop a new customer experience. And from your standpoint and the way that you guys are thinking about what I can build is to understand how will new digital technologies impact the way you do business in the future. And if you can hypothesize or take a thesis on how you think that will impact, what's going to impact business and how it will be done, can serve very well as you think about the devices and the applications that you're building to help expand that market. Another point that Dave had made earlier today, but financial services for the underserved is just a vast marketplace. It's 78 billion of revenue. There's almost 70 million consumers, and even being able to take an opportunity to expand when you think about new data-driven underwriting, lower cost distribution, new products. There's been a lot of innovation in technology since the crisis, and a lot of that has been doing with the fact that how can we use consumer information, how can we use individuals' Amazon purchases and their PayPal purchases and what they look at on Facebook and what they're posting on Twitter to impact their underwriting, and extending the reach to these underserved consumers. And prepaid cards were sort of the market driver towards the underserved community 5 years ago. And the question is, what's going to be the market opportunity focusing on the underserved going forward? We've seen a lot of investment and a lot of applications focused on remote data capture, where with your mobile phone you can take a picture of a check and seamlessly within 1 to 7 business days have that cash in a prepaid or in a debit card or in a bank account, depending on your financial needs. And you're going to see increasing growth in that space. And and lastly, from a slide standpoint, wanted to give you guys some true tangible examples of what we sort of define as disruptive technology, and then the various, call it, verticals within financial services, because everyone talks about the way that things occur, but it's really interesting when you see logos and names of business models that have been evolving. And from your standpoint of understanding what they do and learning from those business models to help expand on your ideas and as sort of entrepreneurs. But when you think about the disruptive changes in the market, the shift from mobile banking, from online and branch-based, the shift to low-cost online automated portfolio management tools instead of active trading, brokerages, calling up brokers, the evolution of insurance and disruptive distribution channels, the ability that insurance companies can now sell directly to homeowners, and the point of purchase is such a focal point to extend data-driven underwriting. Those were not opportunities a few years back, and although personal insurance and selling directly to consumers on personal insurance has been around for a long time, the way in which there's transparency in pricing and opportunities for consumers to shop their price, a kayak or a lending tree of insurance, has really been evolving over the past few years, and you've seen that in technology. And sort of some of the names that are most prevalent in the market, just because everyone seems to be talking about it, but you talk about On Deck, Lending Club, Indiegogo, Kickstarter. I mean, these are technology-driven underwriting platforms that provide credit to underserved markets or create a peer-to-peer lending network that are truly creating an evolution in the way that capital is provided to the underserved or the underbanked markets, and providing opportunities with new credit exposure and new risk and security exposure that people didn't think that existed before. I leave it to Q&A, and if anyone has any questions, happy to jump around and answer any questions that someone may have, and go take it from there. Sure, somebody has some questions, so send them over. Any insights that I can provide as you guys are developing and building your applications and bounce an idea off of is this is the time. So a question that came in was Bitcoins and cryptocurrencies are all the rage now. What's my take on them? It's fascinating. As you've seen the way that the world has been reacting, and the fact that it's been able, Bitcoins itself have been able to attract so much regulatory attention is such a significant concept. Because in order for Bitcoin or any other type of cryptocurrencies to work, it has to be approved and adopted by the Fed. It needs to be regulated so that there is some form of tracking, which is sort of opposite of what the original thesis was for cryptocurrencies, that they weren't able to be tracked. But if the Fed is able to regulate and capture data relating to the transferability and the transferring of these cryptocurrencies, there's definitely going to be a long-term path for them. Now, if Bitcoin exists in 2 years, I'm not quite sure. I don't know if it exists in the way that, this is just my view, but I'm not quite sure it exists in the way that it looks today. But I think the fact that you're developing various technologies around the exchange and capturing and transferring the ATMs of these Bitcoins, I think that is very meaningful to some type of eventual digital currency that becomes much more mainstream and accepted as a legal currency that I think ends up being, there will be some form of digital currency that will be transferable and used for purchasing in, at some point in the future. Just when is to be determined. Any other questions from the group? So a couple of questions that came through. The question was, near field communications, or what people call, the best example of that is sort of the mobile wallet. They haven't really taken hold, at least from a consumer financial service perspective. Thoughts on why? And a lot of it is the fact that you've got security and merchant acceptance, and you're starting to see some aspects of this where there's some tangible examples that are paving their way, but at the end of the day, near field has just been, it's been difficult to really get the merchants to sign on to achieve a tipping point. You've seen, if you think about it, and I'm just looking at some of the thoughts I've written down on this before. When you think about ISIS, the consumers are really only, this is sort of the joint venture between AT&T, T-Mobile, and Verizon. Consumers are only using it because they're being paid to do so. And, for VMe and MasterPass, there just hasn't been a true desire from the merchants who really control that market to jump in. And there's a business called, or there's an exchange called MCX, the Merchant Exchange, which could tend to, we wouldn't be surprised if that platform does succeed because they've gotten the buy-in from the merchants. They just need to get the consumers to adopt. It's already been tokenized, cloud-based, but you need to have a combination between the merchants and the consumers all on the same page, and that's just something that's going to take more time and attention and get people comfortable around on the security side. Now, there are a lot of people that can go into this in quite some, but the whole area, the whole aspect of mobile payments, and either is it NFC, is it other means, you talk about the coin, sort of mobile wallet, all of those items, it's too early for consumers and the merchants to both be adopting at this point, but we'll be interested to see. My guess is that there will be a meaningful cloud-based wallet that's controlled through a card and smartphone in the near future that's widely accepted or widely used by the consumers. And I think from a technology standpoint, you got the merchant exchange, or et cetera, that will be able to adapt. Someone asked, looking back 5-10 years, what's the one financial services product you wish you or your company had invested in? And I would say there's just one. I would say that it's always about timing, but the areas that I think have been the most fascinating that I feel like would have been difficult for us to be involved in or that we missed out in are the Braintrees or the Stripes or the Squares of the world. And what makes those most fascinating is the fact that they really have disrupted the payments realm and the way that we think about payments. And those are just examples of business models that have been evolutionary and have been able to support or have been sort of a backbone to the creation of the Ubers, the MindBodies of the world that are effectively going to be the way the payments by vertical specific, et cetera, are going to be evolving over the next few years. That's just my view. One of the questions is, who are the investors in nonprofit social enterprises as opposed to for-profit ventures you featured in the presentation? Excuse me. And that's a great question. Usually, the interesting aspect about our world when you think about investing is we're investing for profit and in creating value. What you tend to see is the investors that are focusing on sort of the nonprofit social enterprises. It's not usually just for nonprofit. It's you're creating. A friend of mine has a big data business intelligence tool, and a large driver of his focus has been focused on nonprofit social enterprises. But those businesses, his business model is still, attracting value and is attracting a service to those nonprofit enterprises. So there's a combination between the venture community as well as the strategic community, and it really depends on the business model and it depends on the product offering. But there are a number of investors in that nonprofit social enterprises, and it just depends on what the shape and the model looks like. All right. Well, if there are any more questions, sort of leave it on hold for right now. But if there are no further questions, thank you everyone for joining.
All right. Thanks for taking the time to host this webinar with us, Matt. Thoroughly appreciate it. And if anybody has any additional questions for Matt, you're welcome to shoot them to us either on Twitter at FinCapDev, or you can tweet directly at LLR Partners, or shoot us an email, info@FinCapDev.com. As mentioned, the application deadline for FinCapDev is April 7th, and that is not too far out. But again, we encourage everybody who is interested to apply. Last year's competition was super useful. We have a handful of videos up on FinCapDev.com that you can check out to see what last year's demo day was like, who attended, all sorts of great stuff like that. And that, I would say, is that. Thanks again for everybody for coming out, and big thanks for Matt for taking the time to hang out with us tonight.
Thanks, Dave.